All right, I'm going to hurt some people's feelings in today's video, but that's okay because your feelings are not helping you become a better investor. I'm going to explain why looking at seasonality has been killing your portfolio this cycle and the portfolio of many other investors in the space. Now, first of all, history rhymes, but it does not repeat. We've all heard this statement made before, right? But when you approach markets with certainty, right? Saying, okay, history is going to rhyme, it's going to be similar. It is a total losing strategy. In fact, it's a very mid-curve take on the market if you approach things with certainty. As investors, you have to understand that we get paid to make money. We do not get paid to be proved correct in our views, only if our views are correct in the fact that we make money, right? All those factors have to line up together. So as the famous Ned Davis said, world-class investor, the aim is to make money, not to be right. Okay, we share the same last name. We don't share the same degree of investing experience, but I'm working my way up there. But the thing that you have to understand is that we get paid to make money as investors. We do not get paid to be correct in our views, and oftentimes our views are associated with our feelings unless we've reached a certain level where we can separate those two things aside and we can focus on what really matters. Now, seasonality is something that has killed a lot of people's portfolios this current cycle because they've actually been invested during wrong periods of time in the market, which have led to them losing money, or being uninvested during the wrong periods of time, which has also led to them losing money. Now, give me a sec to explain what I mean. This isn't the most clear chart, but it depicts seasonality perfectly. And many investors live by the rules of investing based off of the seasons, right? Investing in Q4 when Q4 is always supposed to be strong. Investing in Q1 when Q1 is always supposed to be strong. And avoiding the middle half of the year between May all the way through September where apparently nothing is supposed to happen in the market. Now, these are assumptions from seasonal investors, okay? This is not how it's always worked. I get it. This is the data. You're looking at it. It is true that the market does tend to perform its best in Q4 and in Q1, but it doesn't mean that it can't perform in the other parts of the year. And specifically when it comes to crypto markets, which are going through a completely new paradigm shift right now, does not mean that you can't see performance during these air gaps in the year that most investors would assume you would see no performance from. So these are some seasonal investor rules, and these are assumptions. Q1 is bullish because Q1 is always bullish. Okay. Q2, bearish. Sell in May and go away / beginning stages of summer doldrums. Okay. Q3, summer doldrums, September effect. Okay. Q4, bullish. Q4 is always bullish. All right. This is if you had to poll the majority of people who are investing right now, professional, non-professional, retail, etc. They're going to say, yeah, I understand the seasonals. Q1's good. Q4's good. Summer sucks. Got to be careful in the spring because of May. Got to be careful in September because of the September effect. So yeah, I'll just wait for Q4, or I'll just hold through Q1 no matter what, or I'll hold through Q4 no matter what because those are the best times of the year. And the truth is that that's not always how it works. And I want to point out a few examples based off of these trends that have absolutely killed people in this current market cycle. Okay? I want to start from the most recent price action moving backwards. Now, my red boxes on this chart are labeled as periods where you should see seasonality telling us that the market should be moving lower. First of all, we are looking at the most recent months over the summer, right? Sell in May, go away. Well, here's the beginning of May. If you'd sold here, you would have gotten out of Bitcoin at about 95,000 and missed this entire pump that we experienced all summer long. Okay, you would have avoided this, arguably the most bullish part of the entire year that we've seen so far. You would have avoided and missed it if you listened to seasonality as being one of the key components of your investing strategy. Again, if you look at September, the month that we're currently in, you also would have avoided this period of time where the market has been going up since the beginning of the month. All right, so seasonality didn't work here for this summer, didn't work so far for September of this year. That may change. I'm not saying it can't change, but so far, for Q3, it didn't work. Let's look at Q1. When we look at Q1, what we can see of this year, well, people say, hey, Q1 is always bullish, especially Q1 of the post-halving year. Excellent time to be invested. Well, if you just listened to seasonality at the beginning of this year and held on no matter what, you stumbled into a very big drawdown, didn't you? That probably shook you out of the market down here and made you miss out on this move, right? So if you listened to seasonality at the beginning of Q1, you didn't do very well. Now let's look at seasonality in Q4. Bang on the money. Last Q4, last year, excellent period to be invested in the markets. Then let's go a little further back. We can look at the halving year, right? 2024, halving year summer, usually bullish, right? People remember DeFi summer in 2020. They were expecting summer 2024 to be bullish. This was a bearish period of time. If you'd only stayed invested based off of seasonals or expected performance based off of seasonals of the halving year, then you probably would have been caught offside during this period of time in the markets and failed to recognize that we had already seen a massive, massive explosive move during the run-up to the halving that happened in the middle, somewhere in here, right? Okay, then let's look at this period of time, right? All the way through September to April of 2024. This was September 23 to April of 2024. And what we can see here is seasonality, again, tells us that there should be some sort of crash that happens before the halving, right? The market's not going to just immediately run from the bottom of the market cycle up to new all-time highs pre-halving. That's not possible, right? That's exactly what happened. The market ran all the way to new all-time highs, or previous all-time highs, let's say, before the halving even happened, and it was put in by March of 2024 in the halving year, right? Explosion started in the pre-halving year. People don't expect this. The seasonality here told you this wasn't the best time. Now, Q4 historically pretty good, Q1 historically pretty good, but when it comes to Bitcoin specifically, everyone here was cautious, right? This was the time that I was focusing on getting fully invested from this period through, late 2022, early 2023, late 2023. This is when I was focused on getting fully invested into Bitcoin and my initial batch of altcoins in this market cycle. Most people were not doing that, and they waited until they FOMO'd in at the very top here in the spring of 2024 to get started, only to get really rinsed throughout the rest of that period of time as we progressed into the spring and the summer of 2024 before we had another explosion, right? So seasonality knocking people offside again. Okay, well then let's go back to the previous market cycle. People saying seasonality, Q4, it's going to be the best time of the year. It's going to just be like 2017 again, post-halving year, Q4, blow off top. Let's see it. Let's happen it. Boom. November 2021, what happens? Market cycle ends, beginning of the month. Boom, we're in a bear market by the end of Q4. Nobody realized that. Nobody thought that was possible because they weren't looking at what actually drives markets. Let's go back here. Again, people saying summer, usually a bad period of time to be invested. Well, if you avoided the summer in 2020, you missed DeFi summer, right? Again, people here saying 2019, summer, worst time of the year to be invested. You missed all this run up. If you had just waited for Q4 to position, guess what? You would have been positioning for a downtrend. And then if you had held on expecting Q1 to be bullish, you would have also experienced a pretty strong downtrend. Now, again, this was a black swan event, so we can't say this is, correlated with seasonality in any way. It could have been a very bullish Q1, and again, the market cycle could have just started here instead of having this jump start that we saw during the 2020 March collapse. But again, seasonality didn't help people in these scenarios. Let's look here. Let's go back to the beginning of the 2016-2017 cycle. Okay, seasonality told you didn't want to be invested through the summer. Well, this was a pretty bullish summer at the beginning, sideways price action, I guess, through August and September, but we were in a higher price than we were at the end of the summer, or at higher prices at the end of the summer than we were at the beginning. Then you want to stay invested for Q4. Okay, well, stay invested for Q4, you do well. Stay invested for Q1, you do well. Okay. Then you want to avoid the summer, right? Sell in May and go away. Well, look at the charts at the beginning of May here. What happened? This was the most explosive part of the cycle. And then what happened? We get into Q4, right? So if you'd waited during this period of time, you missed this. So the point that I'm trying to get across is not to cherry pick all the time seasonal investors were right or wrong. The point that I'm trying to make here is that you focus too much on seasonality and you miss out on the majority of the movement. You need to be invested in these markets for them to pay you. There's no other way to do it, okay? Time in the market is very important when we're in a macro bull market, right? That's the point that I'm trying to make in this video, is that seasonal investors during this current cycle have not been able to effectively catch the wave because they're worried about seasonals. I remember people getting so freaked out about going into this summer. Oh, we got the tariffs. We got all, it's going to be so volatile. It's not going to be good. Great summer, right? Again, people were freaked out at the beginning of the cycle. No, the bear market's not over. There's no way. They haven't even cut rates yet. We'll wait till rate cuts. Boom, missed this. So a lot of people got caught in entering the cycle here and here, and they missed the entire wave. And they've gotten scared at certain points in the cycle because they don't know the directionality of the trend. Okay, well, what I want to explain to you is that there's a better way to invest than just looking at the seasonals. In fact, looking at seasonals is a horrible way to invest, in my opinion. You need to be focused on looking at much more than the seasonals, because yes, the seasonals can tell you predicted directionality based off of what we've seen in the past, but they can't predict what's happening in the future. They can't predict the paradigm shifts that we're going through with liquidity, with advancements in AI, with advancements in crypto regulation, for example, or adoption, or institutional adoption, or institutional buying pressure. It can't factor all these things in when you're looking at historicals, when you're looking at seasonals. And interestingly enough, right, during this whole period of time, global liquidity has just been continuing to slowly grind higher, saying that for the most part, you should have been invested this entire cycle, really with the only dramatic drawdown in global liquidity being one that we saw hit the markets in Q1 of this year. Okay? From this point forward, when global liquidity hit the bottom in 2023, let's say, and the market was rebounding with global liquidity, that was your signal to start increasing your position sizing as long as the global liquidity trend continued. Now, it did stall for a little bit, okay? But eventually, it started to continue higher. Now, if you look at this particular example here, what you might notice is, hey, global liquidity was moving sideways, okay, but the market was moving higher. Why was the market moving higher here in a time where it wasn't supposed to be historically or seasonally? Global liquidity wasn't telling it to move higher. Why? The institutions were setting the stage for the ETF rally, and big investors and big players in this space knew what was going to happen. They knew those BlackRock ETFs were going to be approved, and guess what? The price of Bitcoin was going up in anticipation of that move. And then when they were approved in January, everyone said, "Oh, sell the news, sell the news. It's going to be terrible. Now we can have the pre-halving collapse, and then we can start the market cycle." Well, the pre-halving collapse was a move to the upside. Okay. It was a melt up, not a meltdown. So again, not a good example to really say, hey, well, seasonals helped me here. You know, I should have not been invested. No, you're not paying attention to the broader picture, not paying attention to the factors that have been moving this cycle. This cycle has been an institutional adoption cycle and a global liquidity cycle. Global liquidity is going to have an impact in every cycle, but this has been an institutional cycle. This was the cheap money retail cycle in 2020, 2021. Again, what could have told you that seasonally, this might have not been the best time to stay heavily invested in the market, even though it was Q4. Well, the dollar started to bottom in the summer and really start to gain some momentum by late October, signaling there's caution to be had ahead. And that's exactly what happened come, mid Q4 for Bitcoin and end of Q4 for S&P and NASDAQ, is that the market started to really roll over. Okay? So I'm not here to cherry pick every time global liquidity has been right or wrong and calling these moves or the dollar, but you can't just be focused on seasonality, because seasonality alone is not going to protect you from this market and having your strategy be offside at all. You need to be focused on so many more things. I've just picked two small parts of what I look at as being my macro strategy, looking at the strength of the dollar, the directionality of the dollar, and of course, the directionality of global liquidity and the velocity of global liquidity. Seasonality, of course, I will consider in my strategy. I'll always look at seasonality and go, well, what do the seasonals tell us should happen for the next couple of months going forward? But I will never, ever get hung up on seasonals as being the focus of my strategy. And I've talked to way too many people this cycle that just stayed invested all of Q1 no matter what, because they assumed Q1 of the post-halving year was going to be bullish, and people got smoked. And you know what? We got out of the market in early Q1 because I could see that the market was falling apart and the macro picture wasn't looking good. And liquidity had been deteriorating, was probably going to hurt us badly. Got out of the market, right? Did not want to stay invested when so many people stayed invested and got rinsed, and their patience was completely tested so very hard. So again, now we know what it looks like to be based off of seasonality in your investing strategy. It doesn't really work the best, does it? But if we look at the same truth, which is history rhymes, but it does not repeat, why? Why does it not repeat? Well, seasonality doesn't drive markets, macro does, right? Macro is what's driven that seasonality that we've looked at in the past, which is, over the past 80 years, let's say, if we look at the markets, has worked. Well, guess what? We're experiencing a paradigm shift right now. Markets are not going to work the same way going forward as they have over the past, let's say, even 30 years, for example. You've probably heard the statement, don't fight the Fed. But in 2025, and I should say this for 2023, 2024, 2026, 2027, 2028, it should be rephrased to three things. Don't fight the macro backdrop. Don't fight the institutions, and don't fight the Trump administration. You don't want to fight these three things. These three factors are what control the directionality of the market. Macro conditions, institutions, the guys with the big bucks, and the Trump administration, who is driving the economy at the moment forward and is telling us where they want things to go. Again, in Q1, they were telling us that they wanted things to go down. It was very obvious. They were playing the fear game. Ever since April, they've switched the rhetoric up. They've been talking up markets. They've been talking up growth. They've been talking up Wall Street. They've been doing things that are pro-markets. Macro improved, right? Macro was actually very good from the beginning of this year forward. If you look at it on a lagging effect, I mean, the liquidity picture was starting to pick up. Yeah, we had a few sketchy data prints here and there that spooked investors, but overall, macro has been pretty solid this year. And institutions, well, they've been here the whole time since 2023, scooping up Bitcoin, right? So why would you be fighting them? Genius Act was approved. I saw Tom Lee decided he wanted to start buying a bunch of Ethereum this summer. Again, why would you fight the institutions? Why would you fight the institutions? It doesn't make any sense to do that. And when I go back to the chart and we look at this, right, you can see here that it matters to pay attention to the dollar. If the dollar is falling off a cliff, we can't be calling for a bear market because risk assets fly when dollars fall off a cliff, right? We've proven that to ourselves. Dollar falls off a cliff, dollar hits a high and falls off a cliff. We mark the bottom of the bear market, right? Falls apart all the way through 2020 into 2021. What happens? Markets go bananas. Global liquidity goes bananas, right? So you don't want to fade the macro. You don't want to fade the institutions when they're telling you that they're buying, or they're telling you that they're buying Ethereum like they were this summer, just looking at the ETF flows, for example. You do not want to fade global liquidity when it's rising higher on a weak dollar. You can't fade those things. You can't fade those things at all. And I've been telling you guys this entire time on YouTube. I've posted it all for you. I've told you exactly the direction of the markets. I've given you both options, as you always have to consider when you're investing. You have to consider your downside risks. You have to consider your upside risks. Your positioning ultimately is what determines where you truly feel the market's going to go, or where you truly think the market's going to go based off of your strategy and your systems. But ultimately here, I did say summer has the potential to be bullish for a number of factors. Summer started to look bullish. I harped more on the idea. I told you about the fact that you don't want to be holding altcoins that underperform Bitcoin and Ethereum when it's an institutional cycle, and those are the two assets they're focused on. I told you again, crypto summer is coming. And then I posted a massive 2-hour breakdown explaining my thesis for a heat wave rally in the summer. You can go back and you can watch this video. It's 2 hours long. And I talked about all these factors that could set up a massive run for the summer, and we saw that play out, okay? And then I also told you guys about how to look at your altcoin portfolio and understand if you really should be in the position or not. You know, how to look at it against Bitcoin, how to look at it against Ethereum. Then I talked about Ethereum and Ethereum's comeback and why I believed that it was going to make a raging comeback and it was worth an allocation into portfolio. Boom, Ethereum's comeback. Get positioned for Q4 now. What happened? Ethereum exploded 100% in a month after posting this video. Month and a week, month and 2 weeks max. I also did a really long podcast with the co-founder of Alpha AI, my business partner, Leo. We talked about markets. We talked about stimulus. We talked about treasury refinancing. We talked about all of these factors that were bullish for markets. And again, how to make sure you're not on the wrong side of the market. And then I talked about most recently at the beginning of September why the macro conditions look good and nobody should be panicked at the beginning of the month to sell everything and wait for better entries. The market has only been going higher all September, right? I posted 3 videos about this. And then I posted about why people are now harping on the fact that rate cuts are going to be bearish for the market, which again, I do believe that they're wrong about. I don't think rate cuts are going to be bearish for the market. There's not enough data to concur that that's going to be the outcome as of right now. But I've been making these videos for you guys. I've been telling you where the market is going to go based off of the macro, right? Based off of these factors right here. Macro, institutions, Trump administration. That has been the focus of my analysis, and that has been allowing me to be bang on the money here. And for even for you guys publicly, imagine what people in BNB have been learning from me and have been able to experience from positioning alongside me in real time when I'm making the moves that I'm making in my own portfolio. Everything in YouTube is delayed. Everything I'm talking about here is delayed topics that I've already taught the group, months or weeks ago at this point. They're way less relevant on YouTube. Okay, so my conclusion is that seasonals are crap when it comes to looking at markets, and you should not focus on seasonals as being part of your core strategy. How many people did you see over the past couple of weeks say, oh, September is going to be bearish? How many people did you see over the summer that said, I'll fade the rally, don't worry, it's going to fall apart. As soon as we start to see rate cuts in the fall, it's going to fall apart. It's not going to last anymore. Crypto market cycle is over. This is just going to be a bounce. Boom, next thing you know, we're at all-time highs in the summer. ETH's raging, ETH's rallying, everything's going crazy. And people are saying, oh, well, okay, well, buy a bunch of altcoins. It's altcoin season. It's the end of the cycle. All the altcoins underperformed Ethereum. All of them. Almost all of them, right? So again, I struggle to find many people in this space, specifically in crypto, that I can look to and say they know what's going on in the market, right? And this publicly documents that I do know what's going on in the market. And therefore, I hope that you found this channel, and I hope that you found value in my work, because it has been powerful for people to listen to these videos and to watch what I've been working on here and stressing to people about what's important to look at in the market and what's not important to look at. So with that being said, I'd like you guys to subscribe if you're enjoying the content. Of course, follow me on Instagram, follow me on Twitter at Luke Davis BNB for more daily updates. And I'm actually hosting a live investor workshop for free later this month. It'll be on September 28th at 12 p.m. Eastern. You can pull out your phone. You can scan this QR code right now to register. And I will see you on the live workshop about 2 Sundays from right now. I'm going to go over my entire Q4 game plan, entire macro playbook for where I think markets are going to go in Q4 and into Q1, and some things you're going to want to look out for that may be surprising or may shock you or may hit you that you're not prepared for. I'm going to go over all of that in this workshop. It's going to be about 2 hours long. It's going to be very in-depth and detailed. If you want a preview of what this might be like in terms of the value you're going to get out of attending, I would go back and I would watch this video here. 95% of investors made no money this bull market. This is the 2-hour video that I would watch that will resemble what I'm going to talk about. Completely different topics, completely different playbook in this particular presentation. But again, I want to get you guys prepared for Q4, because who else is going to do it? Like, show me somebody else that's making all these videos that was just bang on the money for the past however many months this has been in a row, helping people stay on the right side of the market and, telling them what to look out for versus not. I just don't see it in the crypto space. There's just nobody who's coming close to this level of analysis and understanding the actual macro big drivers of the markets. There's some people who are better at altcoins than me. There's some people who are better at, weird side strategies than me. It doesn't matter. Overall, if they're not right on the wider spectrum of where things are going in the market, they're not helping you win in this market. Okay. So if you want to be on the winning side, of course, you want to be in BNB. If you want to get access to all this information in real time and not late on YouTube, for example, and in depth, and work with me, having me in your back pocket, then this is the place that you're going to want to be. You can apply here. You can skip right to the chase and we can get to work this week. If you want to see more, the masterclass is going to be amazing for you later this month. So with that being said, guys, hope you enjoyed today's video. Don't fade it. Don't focus on seasonality, focus on macro, focus on institutions, focus on the Trump administration. Do not worry about seasonality. Do not look at charts like this and say this is the only time you could be invested is in Q1 and Q4. I showed you guys on TradingView how that can destroy your portfolio. I'll see you in the next video. Bye.